Check 1 2. Hey, 1 2. Check. Yes.
Testing, testing, testing. Can you hear me? Testing, testing. Can everybody hear me? Alright. Can confirm on your side after the check. So
Yes, we can hear you.
Perfect, perfect. So after good night everybody. Join me remotely and hope we are all ready to enjoy a good night. Let's discussing, stocks and everything else that's going on. So as we today, the Regency Petroleum IPO officially closed early this morning. We should get the basis of allotment within 6 days, which is December 1, and it should be listed within 21 days, just 2 weeks from now. Otherwise, there was also the Mayberry public bond offering, which was published earlier today. 4 different tranches. The company is looking to raise between $5 billion, which is the base amount they're looking to raise, with an option to upsize to a maximum of 7 billion Jamaican dollars. And this is not the first company 2 or so weeks which has actually increased from the market. So as I can basically explain, Victoria Mutual Investments Limited actually increased their target amount in effect from 1.7 billion Jamaican dollars from their indicative term sheet to 5 billion Jamaican dollars. And this is kind of just showing you that a lot of money is out there, and these brokers are going to, or the companies, financial in particular, are going to see how best they can get access to that money to deploy it as needed. For those who are wondering, the Mayberry Public Bond offering is a minimum of 20,000 Jamaican dollars and 10,000. The first tranche is for 13 months at 9.25%. The next tranche, 18 months at 10%. The third tranche is for 2 years at 11%. And the third tranche is for 3 years at 12%. N3 Capital Markets is also doing their own bond offering of up to $4.5 billion at 10.5% for 18 months. And the rates I'm referencing right otherwise, all the rates I've just quoted so far are actually fixed rate. Inflation is at 9.9% point to point. So some of these bonds are basically on the crisp of the point inflation figures. Otherwise, we saw over the last week where more securities on the market have experienced 52-week lows. And what does that mean? 52 weeks is representative of a 1 year period. And if you're at 52-week low, that means that your stock has hit what you would call the lower bound in a 1 year period. So, for example, Signals Investments Jamaica Limited JMD stock actually traded down to $11.50 in the week. We also saw where, for example, when it came on to even Surgical Group Jamaica last week, where it traded on to $40.80, we saw, consistent decline in securities. And when I checked it out earlier today, the junior market, which had hit a peak back on May 9, is basically going back to the February levels in terms of index increase. So the junior market increase up 33% up to mid-May. As of today, it is up 13% year to date. The JSE index is down by about 14-15% year to date as well, and a similar thing being observed across the rest of the market. So, for context, and this can be attributed to, for example, persons deciding to prepare capital for, in this case, example, Regency Petroleum's IPO, neighbors public bond offering, or any other kind of events happening in their personal lives. So right now, some securities are experiencing historic lows, but the businesses have expanded considerably otherwise. We also saw in the last week whereby, or last 2-3 weeks, whereby some financial companies such as NCB Financial Group, Human Group Limited, and Proven Group Limited all did not declare dividends with respect to concern of the current environment, whereby the continued volatility is impacting the capital bases of these companies, which have regulatory requirements for some of their subsidiaries as well. So some dividend investors are continuing to be impacted by this development at the moment, but this is not something that is widespread to an extent across the entire industry. You have companies such as Scotia Group Limited, Jamaica. You have Signals Investments. You have even, for example, Panjam also still paying dividends, and Surgical Group Jamaica as well. So right now, investors should be very critical of the decisions right now in the current environment. While the BOJ said that they actually intend to pause at the current 7% policy rate they have instituted at the moment, this is subject to the evidence of the pass-through declines from international commodity prices into the local market, and also the actions of the US Federal Reserve. So all of this means is that for persons who are looking to invest money, persons who want it are going to likely buy a
David?
better return. Yeah, you can hear me?
Oh, sorry. Yeah, man. I just
ensuring that we're good. David, I wanted to ask you something. Is there any price movement on the market that happened this week that we should be aware of? Any large price movement? I saw something Panjam and JP. Um, yeah. How did that go? If you could just give us a brief on that. We want to go live with Mark and the Barita team in 5 minutes.
So I'll get that done quickly. So JP's year-to-date losses were effectively erased because of the announcement on Monday. While Panjam is still trading down year-to-date, but still better than where it started the week at. And for those who don't know, the announcement on Monday was that Panjam will be acquiring the operating assets of Jamaica Producers, and Jamaica Producers in turn will be getting a 34.5% stake in Panjam. So that was the biggest piece of news for this week. And the combined assets of the two groups would come up to $110 billion.
David, what's the implication for investors? I know that Sagicor has a very large stake in Panjam. JP and KW have some shareholding relationship. And now JP and Panjam, and all companies will remain listed. Yes, should investors be looking out for anything? Given that those four companies are now so heavily tied.
Well, I was just going to point out that you mentioned Sagicor have a large stake in Panjam. That's what you referenced, or was it Panjam stake in Sagicor?
Sorry, Panjam in Sagicor.
Yeah, I just have to clarify that. So what this significantly means is that for existing Panjam shareholders, the relative ownership in the business is going to be diluted, but the expected size and increase of their asset base and operating capacity should in turn outweigh the dilution, should in the operative world. And the significance going forward is that in the case of JP, they are going to rely on the dividend income from Panjam. And we also saw yesterday, going into today, that JP is formed a joint venture with Epley called the Capital Infrastructure Group as well, which is likely to be their other source of income, which would be management income from that joint venture. So we can basically see, for 2023, that JP's earnings are going to be restated to represent, the new capital structure of the group, while Panjam's earnings in 2023 are expected to significantly rise because of the inclusion of JP's operating assets. And the funny thing is, Panjam actually increased their stake in Kingston Wharves recently this year. So Panjam owns 0.77% of KW. So the combined entities will effectively own 42.8% of Kingston Wharves. And the thing is, that's just what we've seen for Panjam. We don't know if their subsidiaries are actually buying Kingston Wharves as well, but this is subject to the shareholders approving in Q1 2023. We don't know as yet, we know for sure that it is possibly going to be an associate.
Yeah.
JP side depends on the auditor's agreement as well.
All right. Thanks a lot for that overview, and David, really appreciate it. So we want to shift back over to the live. So welcome again, guys. Welcome to our Stocks on the Rocks November monthly meeting. I see everybody is settling in, getting their free drinks and their free sandwiches over there. We have the speakers. I see the interim CEO of Barita. Well, he's been here for a while. Dane Brodber, our EVP of investments, Ramon Small-Ferguson is here. I see the Barita retail team from New Kingston. Dequities here, always supporting as usual. Members from the industry, retail investors, high net worth. Jason, I see you, high net worth investors. And yeah, so I really the vibe is always chill and nice. And I see your CIO. I don't want to load him up yet. I don't want to load him up yet. But welcome Barita team, welcome Cornerstone, the Cornerstone team. Welcome to all our audience, both here physically at the Palisados, on Twitter Spaces, and on YouTube. Remember to share the link on Twitter. You can comment, use the hashtag SOTR if you have any questions or comments. And I will now invite our moderator for the night, Mark Gill, and invite the guests as well.
Thank you, Simon. Good evening, everybody. Good night. Guess I'll wait on my fellow panelists, Dane, Brodber, and Ramon Small-Ferguson. So while they come, you guys can feel free to join me at any moment in time. But I guess what I wanted to do was introduce myself and then kind of give a context to the discussion tonight. So my name is Mark Gale, for those that um, aren't familiar. I am an entrepreneur. I'm also a financial analyst. I'm a loudmouth on Twitter. And when Simon reached out to me about moderating this particular session, the challenge that he had is that he's a little bit conflicted given where he works. So it speaks to the integrity of the man that he would immediately realize that he needed to recuse himself. So he reached out to me, and I jumped at the opportunity, and primarily because there's the context that I want to give here is that, so as an entrepreneur myself, as somebody that has worked with entrepreneurs over the years, I am very, 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 very bullish on Jamaica. And I'm bullish on Jamaica. And I know this may be a very contrarian thing to say, but yes, we have all of our problems. Yes, crime is an issue. Yes, I would love for things to be very, very different. However, for the first time, in over the last maybe like 15 or so years, the macroeconomic environment has improved significantly and has stabilized. And what that means is that going forward, we have the stage is set for maybe not our generation. I mean, I'm optimistic. Okay, my generation, meaning, I'm a millennial, right? So my generation could benefit to some extent, but I'm really, really optimistic about the generations behind me, my kids, and even in between my kids and me. My generation has the opportunity to change Jamaica in a very, very real way, right? Like, we can take Jamaica into becoming a first world country. And even though we may not feel the full benefits, I personally believe that the stage is set for new, like, entire new generations of wealth to be created in the next 10, 20, 30, 40 years, right? That's my hypothesis. And so there are some key pieces that are needed for that to happen. What you need is a vibrant entrepreneurial class, people willing to start businesses and take risk and build businesses and grow businesses. But you also need finance. You need the financial firms, and you need investors willing to invest in a lot of these new businesses, right? And the new ventures to take risk, particularly equity risk. And you also need capital markets, stock market and so on, that will allow investors that are willing to invest early to either exit partially or fully, or and also to provide growth capital for companies. So we have the capital markets, right? The junior market has been performing really well, and we have the entrepreneurs that are doing it, and as more entrepreneurs experience success, that creates more entrepreneurs. But what has been lagging historically is the finance side, right? And in my opinion, Barita, I think, is a great example of, a financial firm, really kind of taking the mandate of investing in Jamaica and being innovative and being, bold seriously. So without further ado, I would like to welcome Ramon, Small-Ferguson, and Dane Brodber to come and join me. So with that long-winded introduction, the reason I wanted to kind of like give that context is, typically with a lot of these kind of like events, when you're talking to people at a financial firm, you tend to talk about like the financials, and you tend to talk about, like financial performance and all that stuff. So I'm going to take a different approach today. Yeah, we'll talk about some finance stuff, but really and truly, what I want to talk about is the story behind Barita is one of transformation, right? So I want to take a little different turn. So my first question is, all right, so there are two parts to this, right? One is you have the Cornerstone Group that bought Barita it was 2018? 2018, right? And, one of the first things that, they had to do, obviously, is hire, a bunch of people, right? And so these gentlemen, were you guys, so my first question is, were you guys involved in the Cornerstone decision to buy Barita in the first place? And then if not, when did you join?
So no, is this on? Can you guys hear me? Okay. No, I wasn't involved in the Cornerstone decision. I think I was standing on the sidelines and watching at the time. I joined the Cornerstone Group actually in 2019. So things were well along the way by that time.
All right. Okay. So I soon come back to that, Ramon.
Yeah.
It was so that way, but it works.
Oh, yeah. Yeah. So similar to Dane, I mean, I joined a little earlier than Dane, and I joined the group at the Barita level in April of 2019. I too was watching enviably on the sidelines from another broker dealer when Cornerstone acquired Barita. So I guess it's one of those things where they say if you can't beat them, you join them, right? So I ended up there.
All right, great. All right, so that's the context. Now, what I wanted to understand is, so typically, in investments, great returns aren't made, like steadily over time. What tends to happen is that you have paranormal returns or like a huge, so it's slowly and then suddenly, generally speaking, right? So when you guys are on the outside looking in, I remember at the time, there was a lot of chatter. People were wondering what's happening. Why is this, first of all, who is this group, Cornerstone, and why are they buying, Barita? At the time, it was a very conservative, financial firm. So I would imagine where you guys were, you probably were on a career path that was promising, and well, from my perspective, it looks like it was a potentially risky move to make, because if everything failed, right, then you guys would have egg on your face, because like John Ostar, you leave, a good career path, steady, bright, and you go join this risky venture. So what I want to get an understanding is, what is it that you guys saw that made you, because this was before we've seen the transformation of the fundamental performance of the company so far, right? So before all that happened, what is it that you saw that made you decide, you know what, okay, I'm going to take this risk, because the truth is it could blow up in my face and I could have egg on my face. So what is it that you saw that made you want to take that risk?
So so I won't say that I went in like totally on the ground floor, right? I mean, a lot of good things started to happen, and both me and my peers would have observed that Barita is really making some really bold and strong moves, right? But the truth is, even the fullness of Barita, and by extension the Cornerstone Group, and what it was and what it was looking to achieve, wasn't even as clear to me before I made the decision, right? So it was a fairly difficult decision to make. I won't lie. I'd built up a fair bit of reputational capital, where I was. But I think I was at a stage in my career where, I was keen to be somewhere where, the appetite for different exposures was more, and I'd get to see all of that. And it was useful because I was at the point in my career where I was looking for other opportunities outside of the position that I was actually in. So I was looking at a couple of opportunities where I was, and the prospect of coming in and sort of building a risk framework of my own, was definitely interesting to me. I mean, those type of things excite me, and it was at a point in time of my life when it was a good time to take that risk. Now, if beforehand,
So you were in risk at the time, right?
Yes, as in risk at the time.
So you were in risk, as in the industry, you were in risk.
Mm-hmm.
You saw this opportunity, which was risky in and of itself.
Mm-hmm.
So you're making a decision which is, some would say, is a risky decision
Mm-hmm.
to go and build a new risk framework in a new entity that could potentially fail.
Well, what I would say is that being a risk practitioner probably best positions you to evaluate that well, right? And what I'd say is that the risk for me was not really understanding the fullness of what the overall Cornerstone Group was about. You had some snippets, but never really understood it fully. Having gotten there, I recognized that if I had known that going in, it would have been a much easier decision for me, because it was really an exciting prospect. So yeah, I mean, I think definitely, I mean, where I was, I had exposure to building a lot of what that framework was. So the idea of doing that, but doing it on a broader scale, right, and really sort of, in the infancy stage, making it fit for purpose, was really something that excited me. So, I did that, and I have no regrets.
Got you. All right. I'm going to come back to that in a second. Ramon, same question for you.
Yeah, well, I mean, so I got there maybe 8 months before Dane. It was very close to the ground floor, right? Very close to the ground floor at that point in time. But I mean, for the same reasons as Dane, in the sense that I was very excited at the prospect of being able to build and shape something from very close to nothing, right? In terms of the mandate that I was being proposed to be given. I was in my mid-20s at the time, so I did.
And you were a rising star, if I remember correctly at the time. I'm sorry to put you on the spot, but I remember rumblings of Ramon, this rising star in finance. So that was a big leap.
Yeah, well, I mean, I had also built up some capital behind me, albeit with less of a history than Dane. But I was weighing my mind at the time, because I want an opportunity that was a bit more exciting than what I was looking to do. I was pretty happy with what I was doing, but I said to myself, one thing that I didn't want to end up doing in my career was be typecast, right? And that term really comes from show business, where an actor is kind of framed into a particular role, right? So he can only do these type of movies. So I said to myself, I don't want to be typecast too early. I want to kind of figure out who I am professionally, what my risk appetite is, and I want to open up various opportunities for myself, which is really what attracted me to this role. So when I went in, I didn't really have many expectations, but I must tell you that everything within the first few months defied any expectations that I could have had at the point in time. And like Dane, very soon after I got there, I got good confirmation that I had made the right decision in terms of the varying options that were in front of me. So, what I went in to do, which was really help to shape what has happened over the course of the last couple of years, I have ended up being a good part of that. So it really fulfilled a lot of the objectives that I had going in.
All right. Thank you very much for that. So all right. So both of you kind of, based on your understanding of like the direction of the group of Cornerstone and direction that Cornerstone wants to take Barita, you saw alignment with your career and what you wanted to do. So for people that are, either working in the industry now or thinking about, either becoming an entrepreneur or whatever, and they are evaluating some sort of a similar situation like that, right? Like, what sort of advice would you give to them based on your own experience, particularly, with Barita, that would help them evaluate that, both the downside and the upside? And I'm asking this because, or another way to think about this is, what is it that you guys saw that your peers did not see at the time? Because I remember the days. It was not a popular thing to leave industry and go to Barita at the time.
Tell me about it.
Yeah. So what is it that you guys saw, and then how, what's, given that and given your experience, how would you help, either entrepreneurs or people that are looking to make a career a switch, or like something that feels very risky and it feels that they can fall flat in their face? How can they think about, evaluating that decision?
It's an interesting question. I'll start with a part of it while I contemplate the rest and let Ramon come in between. So I mean, I think, well, definitely among my peers, I think my peers probably would have seen, like I said, I mean, I came in a little bit after Ramon, so it was probably a little bit easier for me. So my peers would have seen pretty much a similar thing to what I saw, right? But I think, one, the prospect of growing the breadth of your career of what it is that you did, and two, the prospect of being able to sort of, so it's new and you walk into it, and what it's kind of, just starting. So there is a risk, and you're there to build a risk framework, so that in and of itself is a risk. But that's for me exactly what would have excited me. You know what I mean? So it was, as I saw, a challenge and a problem to solve, which was exciting for me. So I leaned into that, and I think that largely would have been, what would have driven me. I think a little bit more.
So to summarize, so basically, like, you found something that you found particularly intriguing, where just the execution of that thing alone would compensate for the risk involved. Is that a good way to?
Yeah, I think you have to look at I think where you are, because I figured at the time, listen, the timing to take a risk of this nature, I mean, it was a great opportunity. The timing to take a risk of this nature is not going to get better, right? And I was at the stage in life where I think it was, and like I said, I mean, and part of the reason why I'd say it was a risk for me is just because I didn't know the fullness of what it was, right? Because I'm just kind of going there prospecting, so I wouldn't have had the full story. Had I known, I think, like I said, it would have been easier. But I think based on what that offered at the time, and based on the time in my career, I think it was a good time for me. Yeah. I'll be honest, it really came at the exact right time. Yeah.
All right. Awesome. Ramon?
Yeah, so I mean, I'll answer you specifically first about my own situation, and then more generally, I mean, you asked about entrepreneurs looking at making a step, or persons looking for the next step in their career. So for me, similar to Dane, it was at the right time. I was actually, just in the throes of kind of thinking about something different. What else is there for me to do? I've generally taken difficult decisions with the objective of accelerating my learning, or, well, the ultimate outcome is accelerating my career, right? And this was kind of one of them. And, first thing that I thought about was the downside risk, right? I did a thorough evaluation of what's the worst that can really happen, right? I mean, as I said, and when I thought about the worst that could really happen, it could be that I go there and it's not working for one reason or the other, right? They don't like me, I don't like them, or the opportunity that was laid out for me didn't exist, or it just didn't work out how it was expected to, right? And then I looked at what was my next best alternative under those, if any of those scenarios played out. and I was fairly comfortable with the downside risk. So having set that baseline for myself, I was like, all right, well, now I can focus on the prospect of the upside, right? And that's what I did. I thought about what I could prospectively go there to add. Importantly, I thought about what I could prospectively go there to learn, which was a big pull for me. There weren't many people there at the time, but the person who was instrumental in the recruiting process, which is the chief investment officer of the group, Jason Chambers, who is actually here. I mean, he played the biggest and most pivotal role in me deciding to go. I mean, if he wasn't there, it would have been a difficult decision to make, right? That was attractive to me because at that point in time, I was really very eager to broaden the scope of the knowledge that I had gotten before. And that's what made it appealing. So, I mean, I think that kind of mold of evaluating things is transferable to somebody looking to make a move in their career or in a move in their business. You have to get a good sense of what the downside risk is and whether there are any mitigating factors to that downside risk before you make the decision to move forward. I mean, people always say, boy, just take the leap, right? And that's one way to do it. But I've generally taken a risk-based approach to making major decisions like this, right?
All right. Well, thank you guys for that response. There were a lot of gems in there. All right. So, my next thing is, all right. So for Dane, I know that you were the chief risk officer of Cornerstone Group, right? Before you became interim CEO of Barita. And then you were also the head of risk at an institution before that's also known to be risk averse. So now Barita is kind of known to be aggressive, right, on the business side. And speaking from first-hand experience, I've been, helping entrepreneurs do different transactions of different sizes, ask around the industry, and there are a handful of names. Barita is always one of those names, right? So, as somebody that is that built the risk framework for the entire company, the brand new risk framework, how do you balance, the risk side and then the business side, the aggressive bull side?
All right. So, I guess when you're in risk, you spend a better part of your career dispelling the notion that risk people don't like to take risk, right? So, and what I'd say is that, and if you talk to practitioners who particularly start their career in risk with market risk, I'd characterize those people as aspiring strikers who play in defense, right? So, most of those guys tend to be really strong quantitative people looking for the best way to express their skill, right? Or to express their training. And market risk typically provides a good outlet for that. And to the extent that you have that leaning, much of what you look to do is really an optimization exercise, right? So you're ensuring that you're positioned prudently, but you're still always thinking about, okay, how do we kind of optimize the business? How do we optimize how we're actually positioned? And you end up being largely a business partner, helping the front office to really sort of to improve their profitability, but within the confines of the risk parameters. So in that way, risk becomes a one parameter that you look to kind of optimize the business. And if you have that type of focus, it's not difficult to see how that migrates into looking at business. So, when you're looking now at managing a business portfolio and trying to grow that business, you look at risk as one of the parameters that you're working with to really optimize the business, right? And it's not uncommon. I mean, there are a lot of CEOs that I know of in the financial sector who would have had a career in risk as well. Even where I left Scotiabank, the outgoing Scotiabank CEO was once the chief risk officer for Scotiabank, right? So it's a pretty good perspective to sort of view the world from. I mean, usually your training and your focus kind of tends to give you a way to look at the world, and you use that way to look at the world to see how you can tie that with other things and sort of have a broader perspective, and think that view of the world kind of works for me. I mean, so I'm just pretty much about optimizing the business that I'm running.
All right, fair enough, fair enough. All right, so for Ramon, so basically over the last, I would say maybe like 3 years, as an observer personally, I have seen, Barita transform from forgive me for a simple, a oversimplification, but essentially like a repo house, to a more aggressive, kind of more akin to Goldman Sachs before the Republic. That's how personal how I think. I mean, that could be a wrong characterization, but that's how I think about it, right? So how do you guys? So I guess my first question is: do you think that's a fair characterization, of how Barita is now? Is it kind of like the olden time days of Goldman Sachs, one, and then two, if that is a goal of what you're trying to do, and particularly, to look at a whole bunch of different types of deals and whatever, what sorts of deals do you look at, or more specifically, what type of deals will you not look at? Okay, I know you can't say, okay, we'll look at everything. I get it, but everything isn't everything, right?
A good question. So let me comment on the comparison that you made first. So I mean, what we've set about doing over the course of the last 3, now going 4 years, is to really add pieces to what was a pretty good business when it was acquired, right? We set out to add additional capacity and really build out a full service investment bank. You're right to some extent in that we see the investment banking business as being an enabler, a true intermediary. Right? And what I mean by that is it's kind of twofold. One is on the deal side of the fence, we're really looking for solutions for entrepreneurs. We're looking to make the kind of impossible possible. We're looking to fit in where other financiers draw the line or stop, right? For the purposes of their own capabilities. That's really how we see investment banking, right? And to do that, it means sometimes we have to stand in the middle and share some of the risk with our clients. And we have set up the business in a way, deliberately so, where we are actually capable to do that, both with respect to our financial capacity, as well as our human capacity in terms of how we think, how we're able to manage risk, etc. Right? So that's one side of the business. The other side ties back to the common man and woman here in Jamaica and the region, right? And that's really what Barita was born out of when Mrs. Rita Humphreys-Lewin founded the business in 1977. We've held on squarely to that, right? The retail piece is very important to us. It's critical for us when we think about our role in terms of economic transformation to not only think about what we can do for business, but also how we can translate that to wealth creation for all our customers. So it's important to us that we're accessible. We still have very low minimums. I think you can start investing in it as little as like $2,000 at Barita. So that's how we see ourselves, being that medium between the small man, quote unquote, the regular guy looking to start a serial investment account to build a future, and the guy in business who is looking for a solution to complement what the bank is telling him and his equity to make a project possible, to make the next phase of his business possible. Right. So there are some elements of that pre-IPO Goldman in there. Right. Certainly a lot more structured and risk aware, and we do have the regulatory framework under which we fall, but we definitely try to be entrepreneurial. That being said, in terms of how we evaluate transactions, right? So, I mean, Dane spoke a bit about the risk culture, and yes, it may appear from the outside looking in that we're aggressive, but the truth is we are very risk aware, and we take a risk-based approach to looking at the transactions that we do, right? So what that means is we may look at something that may seem a little bit out of the box, But what you don't see in the background are the belts and braces that we attach to ensure that the foundation on which the transaction is built is very solid. Right? So we from time to time don't end up at all giving the client the solution that they came in the door thinking that they needed. Right? We work very hard with them to ensure that we meet in the middle between what they want to accomplish and what our risk parameters dictate that we need to ensure that we're managing in a prudent way. Right? So to think about the types of transactions that we will do and what we're focused on doing, we are very clear internally that we're not a bank. What that means is that we're not your first port of call if you necessarily want to do a fairly simple germane type transactions. We can do those all day. We have capabilities there, right? But suffice it to say, if you need a banking solution, we're probably going to direct you to our sister company, Cornerstone Trust and Merchant Bank, for that solution. Right? We're not trying to be a bank. That means that we tend to seek out transactions that allow us to use our minds to form bespoke solutions, right? They have the custom solutions that really complement what the banks do, right? So that's the transaction frame, which is why we have kind of focused over the course of the last couple of years on private credit type transactions, which allow for that customization. We have looked at private equity as well, because we've found that there is a void in terms of capital that's committed to those types of transactions, and there's therefore opportunity to make things happen. In terms of what we won't look at, it's hard to say, because I mean, I can't sit here and write industries off.
So let me ask you something. So let us say
Yes.
there's an aspiring entrepreneur out there
Yes.
that is building a new crypto project.
Well, I'm going to get there, but where we won't go is we can't go too early up the spectrum, right? We aren't the entrepreneur, so we won't be putting in what feels like first round equity typically into a project. It does have to be de-risked. We do have to see either cash flows or a very clear path to cash flows, which usually means like a committed contract from a very good off taker, right? Before we get involved. So you need to do some groundwork, or you and a partner need to do some groundwork to get this business off the ground before you come to us, right? Additionally, I mean, there are some areas that we will admit that we don't have a sufficient understanding of to commit capital to. I mean, crypto is one, right? It certainly is a developing area. The technology is very interesting, and there are a lot of applications there. But suffice it to say, we play where our competencies are. And I can tell you that I don't feel sufficiently competent to commit to that crypto project that you described. And there are other industries that are quite complex, right? That
Cannabis.
Well, I don't know whether that's so much complex as it is controversial. But there are other areas where we may not be able to bridge the gap between the understanding of the entrepreneur and our own understanding fast enough in order to make a move, right? We are very conscious about what we know and where our comfort zone is. And if we start to venture too far out of that comfort zone and we don't have a partner who can help us along the way, we're not going out there. Right? So that's how we tend to approach the business that we do in general. And I mean, outside of those industries that have the warning signs around them, we'll pretty much look at transactions across the spectrum.
So just two things I want to double click on, and I know you can jump back in, Dane. But one is that you mentioned you share the risk, right? So I just want to kind of get an idea of, okay, what does that really look like in practice? And then two, let us say that there's a small company that has been around for 4 or 5 years, have sales, whatever, but they're small. They're, let's say, I don't know, 10 million, 15 million Jamaican a year, right? So nowhere near the size of a junior market listing. Is that size kind of like too small for you guys to like, in other words, they need to grow a little bit more before they can, one of your bespoke solutions can work for
Yeah.
them, or what do you think about it?
So I'll answer the last question first. So the truth is, yeah, I mean, there's a scale below which we won't operate reasonably, right? I mean, at the end of the day, we only have a certain number of hours in the day, although we've been trying to extend it, right? So it means that we have to, as Dane said, optimize, and therefore there is a scale above which we have to operate as it relates to transaction size and also expected returns, right? So reasonably, while we might be able to design a solution for a 10 million Jamaican dollar transaction, it just wouldn't make sense for us, right? To answer the other question, sharing risk, we are a firm believer in not bringing transactions to the market that we don't believe in, right? No, what that means is that our internal process, just to give you a little bit of insight into the business, doesn't only involve looking at a transaction and figuring out whether it can sell. It involves looking at the transaction and figuring out whether we should sell it. Right. So we do the deep dive, the deep fundamental analysis. It is sometimes frustrating for some of the internal guys. They're like, boy, the due diligence process is heavy, right? And I'm not looking at Dane when I say this, but it has served us, in all seriousness, it has served us and it has served our clients well, right? Because at the end of the day, in the business of selling confidence, and it doesn't mean that you have a rigorous process, you won't put your foot wrong. But it does mean that potentially, if you put your foot wrong, it's like a sprain as opposed to a broken bone, right? So what I mean by sharing risk with our clients, it means that if our clients are investing in something on our recommendation, they can almost feel assured that one, we've done heavy due diligence, and two, there is somewhere potentially in our group that we have some exposure to this thing, right? And it's for sure that we believe that it's appropriate to take exposure, right? We've set ourselves up to be capable as it relates to, as I said, being intermediaries, standing in the middle, funding transactions on one side potentially, and giving exposure on the other side. So that's what I mean by sharing risk.
All right, thank you for that. I just realized the time, so I'm gonna just kind of like power through these really quickly. What have you guys used? And anybody, any of you can answer. What have you used the APO money? Well, the most recent APO money for?
So this would be the 2021 APO, right? Yeah. So good question. So we'd have set out in that prospectus what we were looking to do. And it was really a continuation of the overarching strategy that we've painted, right? We've said to the market and we've demonstrated it that we have wanted to expand our capabilities with respect to being able to participate in alternative assets. And in our most recent release, we would have described that year to date, we've deployed over $5.5 billion in private credit. So that's private equity type exposures on balance sheet, right? We've also expanded the group's exposure to real estate type assets through the funding that we would have gotten through APOs. Additionally, we really...
That's setting up MJR.
That's correct. So we would have seeded that vehicle. Additionally and incrementally to what I just mentioned, we've expanded our capabilities on the investment banking front. So what additional capital has allowed us to do is to do larger transactions to backstop them. We've been able to underwrite larger transactions than before, which has created value for our clients because, I mean, they get funded sooner, and for ourselves because we're able to earn additional fees and also earn on the side of distributing that risk once we onboard it, right? So it has really been more of building out, one, a capable investment banking / funding front, and two, building out our proprietary capabilities and further our capabilities to bring these non-traditional exposures down to the market, having seeded them. It's really been used to build that out for sure.
All right, so kind of building on that, Dane, can you explain the relationship between the original real estate unit trust product and MJR real estate, and I guess kind of your plans where MJR is concerned? Any listing announcements that you want to make here and now?
Well, for sure, we would make public announcements in this forum,
A
but
public forum.
but yeah, I mean, MGR, through MGR, we would have curated or cultivated our portfolio of really prized real estate holdings, which were pretty deliberately and capably selected. And it would have always been our intention, as we look to democratize wealth, to eventually make that available to our investors. So, through the real estate fund would have effectively acquired the interest in MJR, and pretty much as a result of that, investors in the real estate fund now have the opportunity to have exposure to that portfolio of properties that that we've so carefully curated. So over time, of course, we've sort of been in the acquisition phase, and over time, you'll see, as time progresses and as plans get concretized, more plans in terms of how we look to use those properties, and to the extent that there's any other acquisitions, then we'll sort of look at that. But I think what's useful with this is with this type of fund is that it's a different type of exposure from your typical real estate fund. This looks at real estate across the various spectrums. I mean, typically with real estate type investments that are available to investors, it's largely focused on your stable kind of income generating properties. We've gone down the risk spectrum and consequently down the opportunity spectrum to really look at greenfield in terms of raw land with opportunities for development, mixed use type developments, things that are sort of somewhat competed but have the opportunity for more upside. So you really get a fair the type of exposure that you wouldn't typically get from your typical real estate type investment. So definitely, as we build on the future of that, we see pretty interesting things for our clients. And generally speaking, across the alternative investment spectrum, we are looking to democratize well. So while of course, that's a key part of our investment strategy, we always look from the perspective of eventually making that available to our investors, making it available to our retail investors to the extent that it's suitable for them, through the type of funds and through the type of structures that we develop.
So okay, so just to kind of piggyback on that a little bit. So basically, you raised the equity capital in 2021 IPO. Part of that was used for private alternative asset transactions. One asset class is real estate. Took either the entire real estate portfolio or a chunk of it and merged it with your unit trust funds to give retail investors exposure to what's an asset class that's typically reserved for high net worth and institutional investors. So that only begs the question. Alternative assets is a huge asset class. Real estate is just one portion of the entire asset class. You guys have a bunch of money. You're doing alternatives. So, Ramon spoke about private equity and all those different things. Is it safe to assume that you're going to apply the same kind of like framework to other asset classes within alternative assets?
All right, so and Ramon knows of this pet peeve, right? So within the alternative investment space, it's been something that's talked about all around, right? And so much so to the point that when we talk about alternative investments, we like to be very specific about exactly what we're talking about. So real estate, obviously is the most developed among them. So that's one area of focus. The other areas of focus that we have are private credit, which Ramon spoke about, private equity, and infrastructure. I think there are a lot of opportunities in infrastructure. So, in the so-called alternative investment space, those are the areas that we're focused on. To the extent that opportunistically others sort of crop up, there may be, but in terms of our focus, when we talk about alternative investments, that's specifically what we're talking about.
And so, can we assume that at some point retail investors will get access?
Mark, I'll take this one. Right? So, certainly we've set ourselves up to be capable to avail access to our investor network to exposures that we like from a proprietary perspective. So you've seen what we've done with real estate, so you can make inferences around that.
All right, fair
Yeah,
enough.
I mean, just to say though, I mean, as Dane intimated earlier, suitability is important, right, and critical for us. So it's important that even if we offer particular exposures to our clients, it's done in a way that is best suited for them, and it's done in a way that will allow them to achieve the requisite level of diversification and other matters that are very important from a portfolio management perspective.
All right, cool. All right. So I mean, I have to ask. You guys went on a capital raise tier over the last couple of years. Kind of press pause a little bit in 2022. So either the remaining of 2022 and 2023, are there any capital raises on the horizon that we can expect?
All right, so I'll answer this question without answering it, as I've become skilled in doing, right? So let me talk a little bit about why we would have raised all that capital, right? So, I mean, obviously, the company was acquired in 2018. We had about $3 billion in equity capital, about $18 billion in assets. And naturally, Cornerstone had a post-acquisition strategy set out. That post-acquisition strategy required the business to be of a certain scale, right? And the strategy from an investment perspective, we've been very public about the areas of the investment landscape that we favor, therefore was going to be very equity capital intensive. We needed patient capital. We needed to be in a position where we had a very deliberate level of leverage below industry standard. We needed to be in a position where we had very high capital adequacy. Right? We needed to be in a position where we had very good liquidity. And that really informed, one, the type of capital that we raised, and two, the level in terms of capital raises. Right? So we're very deliberate about how we structured our capital stack between debt and equity. So it wasn't a situation where we were just kind of going out there trying to raise as much equity as we could. It was very deliberate. We saw what was happening in the market at the time. While it wasn't easy, I mean, we did our largest fundraise in the middle of the pandemic. There wasn't even a vaccine at the time. The capital markets were, for all intensive purposes, closed, right? But it was core to our strategy to ensure that we got up to a particular level. So I say that to say we have very deliberately raised capital to date, and anything that you see from here on out will be in the same deliberate frame.
All right, so let me ask it another way. Given the current levels of capitalization of the company, and, you know, well, from the outside perspectives, the level of ambition that we see coming from Barita, are both levels equally matched? Is the capitalization level and your level of ambition equally matched?
Well, I think what I'd say is, I mean, a similar thing to Ramon, right? I mean, we looked at the scale of our strategic ambitions and decided that we needed to raise enough capital to pretty much accomplish that scale, right? So I mean, I'd say they're matched. I mean, we were deliberate about, you know, the capital that we wanted to raise based on the nature of our strategic ambitions and based on being able to really pursue that, while in the interim being able to weather, you know, any stress that would come in the interim, right? Because we want to ensure that we're able to stay focused on that while still being able to weather any interim storms.
All right, fair enough. All right, let's switch gears a little bit to some personal questions, so we can get to know you as people, not as, you know, bold Barita execs. All right, so tell us two things that you do outside of working and studying. And we know you have one bag of credentials behind your name, the two.
Wow. All right. So, well, the two things that I'd normally say, which you know I haven't been able to do in a long time, is I play cricket and I play tennis. I mean, I'm out and about every so often, and you know, enjoy that domino game as well. So
you watch a whole lot of test cricket whenever it
boy, this This is a rough road to travel. No, I was a proper cricket fanatic when I was growing up. I mean, talk about wake up early in the morning, the greatest thing with the turn on the TV and see test cricket playing. No, I'd not yet gotten to the point where I'd watch a match that West Indies not playing. But for sure, but yet test cricket. I mean, I believe it's the foundation of cricket. I think to be a good T20 player, you need that test foundation. You find that I think the better ones among them are sort of trained that way. So still a cricket fan. It's a little bit more difficult to be one now, but for sure, yeah.
Cool, Ramon.
Yeah, so I mean, I've been doing a whole heap of working and studying these last couple of years, right? So it's a difficult question to answer, but I too am a sports fan. I used to love cricket when I was younger too. I used to bowl, but it never worked out, so I'm here.
You have the frame of a bowler, though.
I do. Why? As I said, it never worked out, so I'm here.
All right.
All right. But more so football these days. A whole lot of pain. I'm a Manchester United fan. I didn't expect to be a die-hard Manchester United fan, right? When things are good, you expect them to be good forever. But I am now, and of course, I'm bringing Brazil for the World Cup.
I was about to ask. Yeah.
I don't know if I've made any enemies in the audience.
I was gonna ask, who are you bringing for World Cup and why is it Argentina? But you're kind of first.
Oh boy.
No, well, like Ramon, it's Brazil for me. I mean, the team I've supported has evolved over time and rightly settled, on Brazil.
Yeah.
So yeah, I mean, I'm not I'd be the first to say I'm not a club football. I don't follow club football as much, but I'd say I'm a World Cup scholar. So anything to do with World Cup, from the smallest to the match to the final, I'm there.
All right, fair enough. What was the first stock that you guys bought?
That's interesting.
Well,
As in for your personal portfolio.
I've been trying to remember that, and for some reason, the only stock I can remember that might have been the first one, which of course would have been close to when my career started, would have been Panjam. I mean, at that time I was all out risk taker. I mean, every stock I bought on margin.
Oh, okay.
That's surprising to hear.
I know it is.
Yeah, I think for me, I think it was NCV, and similarly, it was very close to when my career started. It was like after JDX, and financial stocks were trading at some ridiculously low PEs, and I had just learned all about PEs and securities analysis, and I'm like, this makes no sense, and I bought it, and it went down, and it continued to go down for a while.
You remember what price you bought it at?
Boy, I think it was in the teens, actually. And it continued to go down from there. Right? Or maybe it was in the 20s and it went down in the teens. And I couldn't afford to sell it, right? Because I just started working. Good thing I held it out.
I was going to say, you bought about 20s.
Yeah, trust me. I think I ended up selling it at like 70. So
wow.
It's almost back there again. So let's see.
Interesting. Very interesting. All right. All right, so here's another question that I like to think about for me personally is, all right, so if The Economist, I know this may be a little bit morbid, but if The Economist was writing your obituary in 60 or 70 years, right, what would you want them to write? So what I like about this question is it kind of forces you to think through, like what is it that you want to be notable about your life? And then kind of, design your life like that way.
Wow, yeah. I have to give some thought to this question, and I can't, to be honest, Mark, I can't say I came up with a conclusion, to be honest with you. I mean,
so another way to think about it is that if when you're on your deathbed looking back, for example, like what are like some key accomplishments or things that you want to be proud of, that you have accomplished during your life? I don't know if that helps.
Well, I mean, as a as a general part of my of my overall career, I've liked to build. So looking back and looking at the various various things that I've been able to sort of either build from the ground floor up or take from a particular point and really optimize is that. And also a big part of me of that is the extent to which my influence would have helped others to become successful, right? I mean, I think the mark of any good leader is the success of those persons that they lead. So I think those are the things I'd want to look back at.
All right, Ramon.
Yeah, for me it's similar, except in that by 60 years time I hope I would have established an alternative career in music.
Okay. As an artist or as a
Yeah.
producer or
Yeah,
a record label exec?
But one or the other, right? It was, I was going to be a cricketer, and then I was going to be a DJ, and then
Interested.
I don't know,
You want to give us a bar? Give
no.
us some bars?
not during this career. The
The
next
crowd
one.
asking for some bars. I joke.
But in all seriousness, I think so. For me, my career is means to an end, right? In that I've always been very passionate about affecting positive change in the life of people. Like no joke, that's what gives me the greatest fulfillment. So whether it's through mentorship, I mean, as Dane said, my greatest accomplishments to date really center around being able to help other people to succeed. That's what I'm honestly most proud of. Because if you do your job well, it's going to work out. You're going to get successful and you're going to move from place to place and it's going to work. But really, as Dane said, the hallmark is really the impact that you have on people. So very big on mentorship. I'm very big on very targeted philanthropy, right? Oh, sorry, I never turn off this phone. In that, it's not just giving of your time or giving of your resources. It's about the ultimate objective of affecting change, of moving the needle in the lives of the people who you are touching. So that's very important to me, and I would hope that would feature centrally right after the talk about the music career.
All right, cool. All right, so we'll look out for the singles from Ramon in 20 or 30 years' time. All right. So kind of bringing it back to the audience here, what is your personal investment thesis, and how do you go about choosing what to invest in for yourself, for like your own portfolio?
Well, I'd say I think my personal situation is probably the best example of why I'm passionate about pushing people to invest, or passionate about the idea of persons investing in unit trust and professionally managed type portfolios. I mean, as much as I understand and know what I'm doing, to really manage my own portfolio in the way that I'd really want to manage it requires more time than I have, right? So while I'm doing what I need to do with my time, I'm comfortable relying on the professional management of those that I select to do it. But I mean, basic philosophy in terms of what I invest in. I mean, a solid, resilient company with strong growth prospects, and I'm particularly interested in seeing sort of the latent value that may be in a lot of companies. So sort of really looking behind the numbers and looking at the numbers through the lens of possibility. So if somebody sort of looking at this, while the numbers themselves may not show obvious value, if someone were to sort of look at this and do certain things with it, what could it unlock? So that in terms of what I would look to sort of personally invest in myself is kind of what I pay attention to.
So I guess so my question there is just actually, okay, Ramon, you can answer that question and I'll come back. I have a follow-up.
Yeah, sure. So I mean, like the big proponent of really leaving the professionals to do what they do. At the end of the day, there is value in getting to understand the market and having your own personal investment strategy and committing the time. But there are others who don't have the time, and they use that as an excuse. Right? They're like, boy, I can't stay and follow these companies and the markets. I'm just going to sit back and do nothing. There is an alternative, right? That's why we're here. So for all the professionals who are not investment professionals, we can help you out, right? But in terms of my own investing style, I, in the same way as I do in evaluating personal decisions, I always look at downside risk, ensure that I can tolerate it. I'm not a bet the house kind of guy, even though I'm probably at the age for it. So I do take measured risks. And I mean, maybe I'm worse off for it, but it is what it is. It's my personality. I can't help it. I take measured risks. I love to look at value, quite honestly, because at the end of the day, the fundamentals may be wrong for a while, but they tend to work out in the end. I tend to take a longer term approach, not blindly so, not just to say, boy, I'm going to buy this and leave it for 20 years, but longer term from the perspective of looking past maybe the current phase of the company's life cycle out, because I have a long horizon. And I also like investment opportunities where I can actually affect some change, which, it comes with scale, right? So things like real estate and those type of things, I'm at a stage now where I'm getting more interested in that and have a little bit more capability to do things like that. There is a lot of value in real assets. I mean, it's not just at the corporate level, it is what it is. And I mean, if you want to invest on a smaller scale, there are vehicles through which you can do that. Barita real estate portfolio. So yeah, that's it for me.
Yeah, so I was going to ask, the asset class. So you mentioned real estate. Dane, it sounded like you're kind of leaning primarily more to equities, generally speaking. So I would just want to find out what asset classes, aside from real estate, if it's just real estate, just equities, whatever. And then two, Dane, you mentioned that you bought Panjam and margin. Do you still use margin? And Ramon, do you use margin at all?
Didn't you go in before me, or go ahead?
Yeah, I mean, well, definitely in terms of the to the extent that because I mean, in terms of the funds that I'll invest in, it will be a portfolio of different types of funds, right? So between a mix between fixed income, equities, real estate, any other sort of alternative type investments. So the market is kind of becoming a little bit more complete where that's concerned. Clearly, Barita is looking to or is ensuring that it plays its part where that's concerned. So from that perspective, I mean, in terms of what I'll do personally, it will be typically between real estate and equities. But in terms of where I'd leave or the funds that I typically invested in, typically across the investment spectrum.
Yeah, so for me, as I said, I'm not a bet the house kind of guy, but I do use margin because it is what it is. Like with anything else, it's controlled. Listen, you have to make sure that you try as best as possible, more than trying to understand what the potential returns can be. It's important that you spend the time to understand the risks associated with whatever investment you're looking to make. I mean, that should be the hallmark of your investing strategy. Sitting and spending the time to understand the risk associated with what you're doing. So yes, I do use some margin, but in a very controlled way. It may be to diversify. So it might be that I leverage my portfolio of investments to diversify into a real asset, like a real estate type opportunity. Yeah, so that's what I'd say.
All right, and then a final question, Simon. All right, so I mean, so for you guys, so the performance of Barita's stock price over the last however many years is kind of legendary, right? So from 9 to 90 is how I think about it. But for you guys that work there, where you're already getting significant exposure to the firm, how do you think about like from your personal portfolio perspective, and I guess this would also kind of help out, anybody else that works at a publicly listed firm. How do you think about, the equities of the company that you're getting a paycheck from, adding it to your portfolio, and particularly, well, in your case, where the gains would have been significant. How do you balance it so it doesn't crowd out everything else? So, like, what's the allocate? In other words, what's the allocation of your investment dollars of, you know, the company that pays you and their equity relative to your entire portfolio? And how do you think about that? And how should other people think about that?
Well, maybe I can start and Dane can follow up. So it's a common problem that we learn about in for example, like the CFA curriculum, which is what they call concentrated portfolio positions. And it tends to happen to entrepreneurs who put everything into their business. And it also tends to happen to, I guess, people who you can style as entrepreneurs who spend a long time working for one firm, and over time they may be compensated in shares, and the share price goes up and it just, as you said, crowds out your portfolio. Right? I mean, well, certainly for me, given my position in the company, skin in the game doesn't make me uncomfortable. I do have an opportunity to affect change in the organization. And at the end of the day, I am invested in more ways than one in the success of the company. But suffice to say, you do have to sometimes make a deliberate effort to diversify. So, of course, you believe in the firm, but as I said, I'm not a bet the house or bet the firm kind of guy. Diversification is still very important. It's critical for you to ensure that you're still maintaining and sticking to your guns around trying to have as much balance as possible. It's a common problem. There are ways to work around it. And I'm sure if you're having that problem with a public listed firm, you can come to Barita. We can figure out a solution for you, for sure.
Well, difficult to figure out how to add to that. But yeah, I mean, similarly to what Ramon said, having an interest in the firm that you work for, particularly if you're about making an impact there, allows you to sort of benefit in multiple ways from that impact, right? And of course, it's good from both years and a company perspective to align objectives. Now, having said that, I mean the typical and the prudential sort of rules around how you construct your own portfolio still hold, right? So, I mean, diversification is important. So it's important that you sort of build around that portfolio as well, right? So notwithstanding the fact that you'll have that interest, of course, you look to build other both equities and other asset classes as well around that to ensure that even though there may be the tendency to kind of be a little bit more overweight, just based on the nature of the interest that you'd have acquired, to really still ensure that you're adequately diversified. And as as Ramon said, to the extent that there are others that have that issue, then for sure we're here to help.
Every house needs a strong foundation, Mark. So you can look at your company stock as the foundation and you build on top of that.
Oh, got you. Okay, so and then just to summarize, that's like in the US, for example, some of the advice that they will always give, employees is always max out, your 401k, or because, the company will provide company contributions. So anytime, you can get effectively like free money towards your pension or towards the investment objectives, you should do that. So I guess, one way to kind of think about it is, if your company has like an, employee stock options purchase plan or something, or they have some facility to allow you to get exposure, perhaps even at a discounted price to market price, then it may serve you to maximize it as much as possible. And then once you've done that, then you look at diversifying your portfolio outside of that. That's a fair kind of summary.
Yeah, I mean, I'd say that, but I think fundamentally still, I mean, it works for us because we happen to to strongly believe in the company that we work for. But notwithstanding all of that, it's still useful to actually ensure that you're comfortable with the prospects and the associated risks of that company relative to your own circumstances, right?
Yeah.
So, I mean, it may or may not work for you depending on where it is that you are.
Yeah, that's correct. I mean, you still have to look at the downside risk, Mark. At the end of the day, I think I said it before when I was talking about Manchester United, right? Fantastic team, but when things are going well, you feel like they're going to go well forever. But as Dane said, you still have to apply that level of analysis. You still have to look at how concentrated you are, and you still have to balance the risk. No matter how much you're passionate about the company, no matter how much you work there, it's important for you to still try to manage risk in that context. Right?
All right, I appreciate that feedback. So do I have any questions? Where's Simon? I can't. These lights are.
Yeah, man. Yeah.
All right,
Yeah.
do you have questions?
Yeah, man. So the first question, and we got actually, got a few via DM, actually relates to your careers. So Ramon, both you and Dane would have done the CFA, the FRM, and the CAIA. Now, those that are in the industry, that have just started in the industry, not as they don't have the history that you have there. They want to understand, how do you balance, having a demanding job within the investment space and studying for these exams for so many years and passing them?
Well, I think for me, it's a very good thing that I did that early in my career. I think I'd find a lot more difficulty doing that now with the nature of my job and a family as well. But I think a key thing that's important, I think, is just deciding that you're gonna do it. And once you decide that you're gonna do it, you kind of figure out what it's gonna take to do it, and whatever you need to do to get that done, you get that done. I mean, for me, when I took level 1 for the CFA, I had a pretty short time span to do it. I looked at what was in front of me. I decided how many hours I was going to take to get it done, what I need to commit per day, per week, and however I had to get it done, I figured out how to get it done. If I had to be reading in traffic or whatever, figure out how to get it done. So I think a lot of it sort of has to do with will, and I think even and while doing that, I find is important for me. It's important to ensure you take care of yourself in the meantime, right? I mean, running yourself ragged and sort of not having any semblance of a social life at all, I think probably makes it difficult to really sort of be successful. So I've found that it's useful to ensure you take care of yourself in the interim as well.
Next question. Night, everybody. Night, gentlemen. All right. So I have two questions, particularly about Barita. Can you tell me if you expect a significant markdown on the fair market value of the $10 billion worth of real estate that you've purchased, considering the rise in interest rates by BOJ since January? Either of you.
No problem. I'll attempt to answer this one. So, good questions. I mean, generally speaking, there has been a bit of an evolution in monetary policy globally. Liquidity is lower than it was before. Interest rates are higher, right? Inflation is also high. And all these variables tend to have different effects as it relates to asset classes over time, right? Real estate, generally speaking, has tended to show a positive correlation with inflation. We are in an inflationary environment, and particularly, by the way, real estate, such as what Dane described earlier, which is more on the opportunistic spectrum, right? Undeveloped real estate tends to have a positive correlation with inflation, typically over time. And I mean, we several years ago looked at the market environment, which was characterized by the opposite of what we see now, a whole lot of liquidity. Traditional asset prices were going through the roof. Interest rates were really low. And this had been happening for maybe 10 years previous to then. And we said to ourselves, this isn't sustainable. And we're in a business that heavily relies on market conditions being positive in order to generate revenues. And we said we need to weatherproof our business. We need to, as we have said many times here on a personal and business level, we need to diversify. And consequently, we looked at how we could diversify the business in the context of overall regulatory strictures, as well as what was generally available to us in terms of the investment universe. And this is why we've opted to diversify the portfolio how we have. So to answer your question, we see the real estate exposure in our business as actually being a potential source of resilience in the face of the current macroeconomic environment and monetary policy. Hope that helps.
So you don't really expect the interest rates to have a negative effect on the fair market value of the real estate?
Yeah, so as I said, based on what's happening now, higher inflation, and how that has tended to relate to real estate prices, which is positive, we see the prospects, because I don't have my crystal ball tonight, right? But we see the prospects with respect to real estate as being positive in the face of this environment, particularly the kind of real estate that we have exposure to.
All right. And my last question is, can you give me some insights on the internal modeling of the liquidity ratio analysis that you guys at Barita would have, in light of the fact that I think at your unaudited Q4, there's roughly just a little under $1 billion worth of cash, but $100 billion worth of assets. So I don't know if that's a concern for you, again, with thinking about the interest rates and so on.
Well, cash is just one form of liquidity, right? I mean, among the investment assets on our balance sheet, there are assets with varying forms of liquidity. And definitely internally, we're very focused on ensuring that we have adequate levels of high quality liquid assets to ensure that we're able to meet our obligations. So I think when you look at liquidity, you have to look definitely far beyond just the cash measure, and look at the nature of and the liquidity associated with the various instruments that we have. In fact, I would say that to the extent that there is a very high cash balance, I think it would probably be more of an indication of not being as efficient than it would be sort of being illiquid. I think when you look at the comparison between this year and last year and the difference in the cash balance, recall that close to the end of last year would have just done our capital raise. So there would have been quite a bit of uninvested cash at that particular point in time. Now a lot of that cash has been deployed, and a lot of it has been in high quality liquid assets, and we always ensure that we have an adequate stock of that to meet our obligations.
Okay.
So just to complement what Dane said, I mean, Dane is right? So remember, the business that we're in is the money business, right? So our inventory is cash. And what that means is that if I have a big concentration of cash on a bank account earning zero, it means that I'm not turning my inventory over. So as Dane said, you have to look beyond just the cash balance. There are assets on the balance sheet maturing in the next day, less than a week, less than 30 days, etc. That's very apparent. That would be liquid assets. There are assets that can be converted to cash almost immediately by their nature. And that's how we store our liquidity. We don't put it on a bank account because, of course, then we would be earning negative spreads in relation to those monies. But suffice it to say, our investment strategy generally is built on, as I mentioned at the top, very strong capital adequacy, lower than industry level leverage, right, much lower, and ample stores of liquidity to ensure that we are, one, able to meet our obligations, two, able to withstand shocks, but three, able to take advantage of opportunities if they are to arise.
All right. That's it for me. I appreciate the responses, gentlemen.
I have one more question, Mark, from online. So, how has Barita managed to pay a dividend within such a tough economic climate?
So I mean, definitely with the economic climate, I mean, a lot of other institutions, or a lot of institutions, generally speaking, would be pretty concerned about capital, and naturally so. As we spoke about in terms of our just how we would have thought about our capital management. We looked at what the scale of our ambitions were, and consequently would have gone about, deliberately raising, 34.5 billion in the capital between March 2019 and September 2021. Now we're still in the process of really sort of building and growing into that capital. So what happens is that in the interim, it leaves you that much more able to adequately withstand the shocks of the market, and also it leaves you more positioned than most to adequately pay a dividend. So, if our capital levels were at sort of more typical industry levels, then that would and should prudentially be a consideration. But I think, based on the capital levels and the resilience that we have at this current point, it wasn't as material as a consideration, and really left us definitely more equipped than most to pay a dividend. So we're pretty comfortable with that.
And I mean, just to add to what Dane said. So one, basically what Dane said is that it was safe for us to do so because of our very strong capital position, which we deliberately built up over time. But two, we are very focused on delivering to our shareholders, right? And consequently, in the context of it being safe to do so, in the context of our shareholders being very committed to us over the course of the last couple of years, participating in our capital raises, etc., we saw it fit to allow them to participate from a cash perspective in a dividend for this year, which, having settled the score on whether it was safe and, prudent to do so, which it was, we thought it reasonable to reward our shareholders.
All right. Thank you, guys. Simon, no more questions, right? No. All right. Well,
No more from online. I just want to plug, guys, that we have juice, liquor, drink free. Somebody remind me, free juice, free liquor over here. Please indulge responsibly. And the Barita booth is here. So if any of you need to talk to one of Barita's very qualified advisors, then they are over there and ready and waiting for you, Mark.
and if you want to invest like Dane and Ramon in a collective investment scheme, you can just go over there.
Right over there.
All right. Thank you, gentlemen. Thank you all. And that's that.
Thanks,
All right,
guys.
thank you.
Yeah, thanks again, guys. Remember, we have Andrew Williams coming from Regency. So Andrew will be up next. He's running a bit late. There was some rain in Clarendon. Yeah, there was some rain, so he's running a bit late. He's probably around Carpsman. Check, check. All right, guys, ready again. Andrew from Regency is now here, and he's all smiles. So that's a good thing. That's a good thing. So I'll just invite Andrew and the rep from GK Capital, who is the broker for this initial public offering. So you can sit here, and you can sit here. Yeah, man, yeah, man. They'll All right, all right, all right, all right. So the guys, everybody getting drinks, everybody is smiling. I love it. It's always a nice vibe at SOTR. So a few people would have left us on the YouTube. So we're just trying to get back everybody together online. And trying to get everybody that is here ready and going. All right. So just about a minute and then we can start. Trevon, hold up. All right. You ever come before? You come earlier? Yeah, man. So we get lights and everything up and thing now. Yeah, man. Yeah, yeah, man. Started from a van bus. Oh, 2 years now. 3 years now. 3 years now. 3 years now. Right. It's a good thing though. Yeah, man. And you realize the feel is different from any other type of interview that you'll do. So I'm just very nice. So we will ask you all of the basic things already. Right. Make sure you're tired of it, right? The only things that may come up back is maybe a story, but we won't really want to talk about going forward now. Because you're close. Right. Right? So like I started how much I don't know if we're not sure yet. You have any indicative
Yeah, but we don't really want to disclose.
over X, over D, over Y.
We don't really want to disclose.
It's still like an ask that you can say, right? And of course, never ask you to just say, how we met the journey, here. Some of the things we done for prep Andrew and his family and the company as well, and then we have a very nice strategy. So you would have told us some things already, but they kind of want to delve more into what has
hopefully shareholders soon. What can we expect from what the CEO and leader of this
I'll go do this. Okay. All right. All right, guys. Let's go back here. Ambre, Shante. Hold that. All right. So we're back with Andrew Williams from Regency Limited. And he's here with the guy I'm told one of the guys that are critical to bringing the transaction to where it is now. Can I just introduce yourself? Hold on. It's on? Yeah, you can go down.
Yeah, good night, everyone. Damian Curry from GK Capital.
Okay. All right. So Andrew, so let me ask first. You're closed now, right? We saw the notice. You're closed off now. Oh, it's not on. At the bottom. Yeah, man.
Yes, man. We're close now.
All right. So can you guys give us an indication as yet as to how many billions hopefully you've raised?
No, not as yet. More than likely tomorrow figures should be out for the public.
Okay, should be out on the stock exchange.
And I guess in the Gleaner, the articles and stuff like that coming out.
All right, I'm gonna start saying numbers and you can tell me if I'm getting warmer. 2 billion, 3 billion, 5, 6 billion. Andrew, that sounds like a comfortable number, man. So I will pressure them. They said the notice will be out. You have any idea of how many investors came in, or that's still going through the process?
Well, all I would say is that it's a whole heap of investors. People really came out and supported this offer. Even exceeded our expectations.
Yeah.
So 5 figures.
Excellent. One of the things that I really like about initial public offerings, apart from the returns that you get when they get listed and the excitement around a new company, is that it brings quite literally sometimes thousands of investors into the market. And a lot of the times, your company now is the first company that they own. So before Mark was asking Dane and Ramon from Barita what were their first companies, a lot of investors will now say, I joined the stock exchange because I saw Andrew talking on Stocks on the Rocks, Andrew talking on another platform, and he convinced me and I invested in that. Andrew, I want you to talk to me about how does it, I know you mentioned something when we spoke on Wednesday, but talk to me about how does it feel for you who would have made the decision you said from the day you started the business to list in X amount of years. How does it feel now to have closed that transaction? I see that your family is here. How does that make you feel?
Well, it's a very proud moment for me. I can tell you, Simon. It has been exciting times. The preparation was quite exhausting. But we, in the initial stage, as I just said, we set out, put all systems in place to head for the IPO. And as I said to you before, we know what we wanted. We know we have a vision for the company, and we are very patriotic, as I said to you before. Now we decided that the best avenue to expand on this business would have been on the stock exchange. It's very capital intensive, and we wanted to get the Jamaican people involved, our own, because we're a pro Jamaican company. I think this is the first petroleum company that is 100% owned, and still 100% owned by Jamaicans. And these type of companies, these marketing companies, are usually multinationals. Not usually, they are multinationals. So it was a big step for us to decide to set up a marketing company, get the required license and permits. And it is a very proud moment. I'm humbled and I'm proud. I'm a very God-fearing person. And I tell you, this is a true testimony of our faith in God, and He granting us our desires, because I mean, He sees our intentions. They are pure intentions, and we want to grow a company. We want to grow a Jamaican company. I have a lot of pride in my country, and I want just like our athletes, where Jamaica is so small. I keep saying it, Jamaica is a small country, and I cannot imagine a country where not based on my experiences. Anywhere in the world you go, you can almost be sure to see a Jamaican person there. And we are so small. That is to say, we're not limited by our size. You know, we have a lot in us. We are well bred. So I take a lot of pride, and I'm very proud, and I'm very excited. And I really and truly can't wait to start our expansions and have Regency. Or when you talk about petroleum in Jamaica, you're talking about Regency Petroleum. Yeah, I want to transform that, and then we can move elsewhere to the Caribbean for sure, and other places.
Okay, that's good to hear. So, Damian, so this is your first public listing, or you would have worked on a few before?
I've worked on a few before, but
Oh.
the first time actually leading the transaction.
Oh, excellent! Congratulations to you as well. And given that,
Sorry, I almost button. Damon did an excellent job. I tell you. I mean, he did an excellent job. He was very supportive. I mean, hours of the night.
just call him anytime.
Anytime. And Damon even call. I said, man, you can call me anytime. Any hour, anything you want, any confirmation, any information. And he was very facilitating. He was very accommodating. I could call him anytime.
That's
you
good.
know, I could question any concerns, because he's new to us. But any concerns, any questions, he was very facilitating. I must commend him on that.
I realized in talking to you Wednesday, that through that conversation and through some of the things that you would have said, I realized that you were well prepared for some of the questions that you would have received from the market, and you said a lot of the right words. So a lot of investors in our community and others as well would have expressed that the interviews that you've done over the week thus far certainly assisted them in making the decision, not just in filling in wherever the blanks were in terms of information, but I think people invest for more than just numbers. It comes down to the person that's at the head of the company as well, and people, for lack of a better word, felt good, listening to you. So, Damian, tell us some of the things that you would have done on your side, just briefly, to bring Regency to this point.
Yes. Thanks for that question, Simon. So, of course, initially it started out with our due diligence, understanding the business. And I would say the most important part for us at GK was actually understanding Andrew and his vision for the business. Because we can't help him unless we understand exactly what he wants for his business, And definitely from the start, Andrew has always said that, I'm just want to get the IPO out of the way so he can start
So you
working.
can focus on the real business,
Yeah, like,
because this would have taken up a lot of your time as the leader of the company.
Yes, definitely. And I guess from that now, having that understanding, that's where you engage the different parties that would assist. Legal team would have came in first. Ensuring that we're operating within the legal frameworks of the market. And then marketing at the ending part was definitely critical.
Because people have to know, you have to communicate it to
A
them.
business like this is, that's performing so well, but it's all the way out on the western end. It's almost
So the brand may not have, the brand wouldn't have been very familiar to somebody that would not have been out to the west.
yes. So this IPO was kind of like, two birds, one stone. You raise the capital, and people get to know this great business.
That's a good point.
So all of this was a part of the plan for GK and for Andrew. So a lot of this was late nights um, discussing with Andrew exactly what he wants the business to look like. So of course, capital structure is important. You know, people see how much money we raise, but they don't understand that we spend hours and days and weeks figuring out what's the right amount of capital to raise for this business. And a lot of people ask, why you raise this little bit of money? Why you never raise more? You know, and of course, it's always relative, because to a business like this now, this capital, what it will do is actually give them that extra boost that they need to get to that next level. Because obviously they're in the automotive fuel space already, but they want to expand.
Yeah, man.
And that's
Andrew's
what,
plans are very, very ambitious.
yeah.
I mean, some of them are already in play. So it's a bit more than a bit ambition. There are actions already.
Yes, exactly. And that's what we saw, and that's why we invested early. You know, you
Okay.
can see that GK is a big part of this offer, obviously, because we believe in the business, we believe in the vision. You know, so we're investing alongside with all other shareholders to show that, obviously, you know, outside of being a lead broker and arranger, you know, we believe in the business. So all of this was a part of the plan.
Thanks for that, Andrew. I saw you brought your support base here. Your wife and your wife.
That's my daughter.
Oh, that's your daughter.
Daughter,
Yes.
my baby.
Okay. So your daughter and his
First son.
and your
The
first
other one
son.
is abroad. The baby one is abroad. And my wife
Okay. So this is the big son.
is the big son.
All right. So talk to us about how important it is for you to have support, not just from your broker GK Capital, but from your family as well in a process like this and your staff.
Well, first of all, I must say my wife is an attorney, right? So I've been well guided and supported and in that regard. So yeah, man, I'm a family person, as you can see, and my family, my wife, my children have invested a lot in me, and I've invested a lot in them. They have a lot of confidence in me. They are very encouraging. Especially my wife has been very encouraging through the process. Not even through the process, but in the initiation of Regency Petroleum. I told you previously we had many challenges. I mean, some real challenges. You know, we had put our all in Regency of other business, but we put our all in Regency. And if it wasn't for my family support, my wife supporting me, encouraging me when you see, boy, we have invested so much and the cylinders are being taken away, they're being stolen. I mean, it is so discouraging. The competition is down on us. They're trying to keep us low. They're trying to match up with us in terms of trying to be very competitive. So we have to fight and we have to persist and be determined to know that, boy, this is what we really want. You know, so I don't think I could have carried through so far without the support of each and every member of my family.
That's
It is a very critical factor. It has been a very critical factor, and I must say thank you to each and every member of my family. A special thank you, very special thank you, and it could not be done without your support and consistent support and encouragement.
That's I'm happy for that, man, and I hope you show the kids some support in a tangible way as well. So if they said, "Daddy, you know, you're a listed company CEO now, and I need to go to Dubai if I haven't been there before,"
Right.
I put you there in a spot, but that's fine. That's fine. Andrew, I want to talk about the future more now.
Right.
So we spoke a lot about the past on Wednesday and where you came from and your story and about the offer, the numbers, etc. I kind of want to go a bit deeper. So this part of the process, so I'm a bit familiar as well. This part of the process is done. I know behind the scenes there are reconciliations being done, as Damien would have said, to finalize, you know, who the shareholders are, the allocations, I won't press you on that. I will actually soon, and just the closing out with the stock exchange, the listing ceremony, etc. However, the work on your part, a lot of it for the listing may be done this week. The brunt of it, the heavy lifting, right? Because you are the face of the company.
Right.
Monday morning, what's the order of business?
Before Monday morning, I
Oh,
can tell you.
all right.
Right? Because we already started the process, as I stated before. All right. We are petroleum marketing company. I just go back a bit. Now, it is our intention to, as I said, make Jamaica a country known. When you talk about petroleum, you're talking about Regency Petroleum. Meaning that we intend to have our service stations and our cooking gas cylinders, household cylinders across the island. We currently, I wouldn't say fully like saturate the western region, but we are getting there for the western region. Now that's for both LPG cooking gas and for the petroleum. We are known in our region to be very price competitive. We offer impeccable service. When I say impeccable service, we try to pioneer. So we don't just stick to the traditional service, what you'd find at a service station, or even for our LPG. We try to pioneer stuff. I can tell you, I can't even go further in detail. You would purchase a cooking gas. I don't know how it is in Kingston as yet. I'm not sure if you, and we offer other services. When you purchase a cooking gas, you would get additional promotional items from time to time. From time to time, we have promotions monthly. We have giveaways. When you purchase a cooking gas, you get complimentary items that would go with the cooking gas. For your service station now, we offer the general service, and what we are proposing to offer in our service stations, I can tell you, and I don't want to give away too much of the secrets as yet, but we'll be offering like a coffee shop, which is Cafe Parfait. It's going to be a branded. We want it to be a franchised coffee shop.
That's a Regency brand.
Regency brand, right? It's actually, I can mention my daughter is waiting to go to Ivy League now. She's going to study business at the Ivy League, and she's that's her project. I actually empowered her to take over that project. She even told me, "Daddy boy, I don't want you to get involved with Cafe Parfait any at all." She called me today and said the guys are coming down from Kingston to do the measurements for the fixtures and so forth. Just call the contractor and say they are coming by. Don't do anything more than that. You know what I mean? Yeah, but what I'm saying, I believe in the youth. We believe in empowering the youth. Yes, you have youthful exuberance, but you have to know how to control it. You know. So in saying so, we are expanding. We are keeping an open mind. You know, being the CEO, it's not an autocratic movement. It's something to involve from the highest level to the lowest level. We believe that no matter the level, you have something to contribute. And we involve each and every member of our staff or anybody who comes along with an opinion or a suggestion. We don't just set it aside, because I tell you, you'll be surprised. I mean, and I go out for the Bible in terms of you have an angel would come across as probably a madman or a beggar on the road. And so when you see certain persons would have come by, are people saying making suggestions to make your business better, don't just because of the appearance or whatever, don't brush it aside, because I tell you, you'll be surprised to know what contribution, what little suggestion can be made to make your business better. And we welcome, as I said, we are very open-minded. We welcome suggestions. We don't think that, boy, we know it all. You know, we definitely shy away from that. No, I don't want to move from the question too much. Yeah. Our expansion process will entail, for the cooking gas, regional expansion. So It is very capital intensive. It's not a situation where we can just go all out at once.
Because you have to buy the
Right, you have to
cylinders.
buy the cylinders and give them away. So for every new region we enter, we basically have to purchase these cylinders and give them away up until we become established in that area. I think so far we have gone through the worst of it, because Regency now, especially being on the junior market now, it allows us a certain amount of marketing. So I'm seeing now where just over the past 2-3 weeks, we've been getting numerous inquiries. A lot of consumer confidence has increased significantly. So for argument's sake, we probably 3, 4, 5 months ago would have approached certain established companies to supply bulk petroleum, because bulk petroleum is something that we supply island-wide. That doesn't require that significant amount of capital expenditure. We actually have the capacity in place for bulk petroleum. And to break it down for who don't know, bulk petroleum is bulk LPG, and is cooking gas for hotels, restaurants, bakeries. These institutions or these companies, they don't use the small household cylinders.
You would have to change it every 2 hours.
Right. They use the industrial cylinders, which means that they are stationary containers. They're not mobile per se. You don't move them around. They're stationary. So you have a bulk unit or a truck that would go around and refuel these. So our responsibility would be to transport the fuel on a bulk basis to these institutions, which means that we can supply island-wide, because our storage facility we purchase 100% from Petroleum, which has a huge storage facility.
Oh, so that's out
right,
there.
Right.
So you have somewhere where you can distribute from.
Right. So we basically do our deliveries from Petroleum alongside our storage facility.
And you buy LPG from
Petroleum, right? So for argument's sake, if we wouldn't need to store petroleum in Westmoreland for customers in Kingston, we would be able to, we can take advantage of Petroleum storage, so that's what we do. And we are 100% loyal to Petroleum. We don't have no reservations about Petroleum. Their product line over the years prior to Regency have proven itself, the quality. We get quality certificates daily. So we are quite confident in their systems. And their systems, I can tell you, as I said previously, are next to first world. I tell you, they make your company so efficient, and we take direct advantage of that.
Okay.
All right. So we would, for the LPG, I go back to the LPG. We'll expand regionally and gradually expand for the LPG. Similar for the automotive fuels, for the gasoline. Now, as I said, we are known for both LPG and gasoline to be very price competitive. And I know each and every person from the highest class to the lowest class, they watch them gas price. I'm telling you that. They watch the gas price. As long as they get it, as long as the source of the fuel they are purchasing is credible and is reputable, then I'm sure from the highest level to the lowest level, they seek out the most competitive price. I'm sure about that.
Yeah, man. While I'm not at the highest level yet, we're speaking that into being. I can tell you there are particular gas stations in Kingston that have significantly longer lines than others, and it's simply because most people have a perception, sometimes true, that those gas stations are cheaper than the rest. Quick fact, and I always mention it. One of the most expensive gas stations is right here. I won't call them name. In the island, by the way, and it's a fact. I have the data. One of the most, actually, it's either first or second most expensive in the entire island. So Andrew, we need you over here. So all right.
No, well, we are looking to expand now with the service stations. However, for the service stations now, the entire process takes time to construct a service station, and it's not the actual construction process; it's the approval process.
Because the government has to make sure that it's
exactly
safe.
The location. I mean, they are very down to the very last. I mean, they check everything in detail. You know, everything is checked in detail. It's a volatile product, and you have to ensure safety of our citizens, basically. So we are in full agreement with whatever requirements or protocols are required. It's just that it takes time to do the approval process. So what I was saying, I think yesterday to someone, we intend to have at least one service station per year application process being in. So begin the application process for at least one, you know. It can be 2 or 3 because
And I know you're being
process,
conservative.
right? And I'm being
I know
conservative with
you're
that. Currently, as I said, it's not waiting until Monday morning. Even since this week, we're actually seeking out locations to start the approval process for the service stations.
Okay.
And I'm not giving out too many secrets, but we have some potential ones already. So as I said, not as Monday, as of tomorrow morning, because I'm actually coming straight from my office now, you know. I was to check in before we reached by, but we was running late, rain and so on the roads. Anyway, so as of tomorrow morning, we'll be back at it. We're going to explore these potential service station locations, and we step on it right away.
Okay. Let me thanks for that, Andrew. Let me just take some questions from Telegram. So Dre is asking you to elaborate on, and I guess this is from a previous interview, on what is meant by the service station is designed for quick turnover.
Okay, well, it's basically what I was saying a while ago. We're trying to be very price competitive. We acknowledge that price is a major factor in the operation of a gas station for the sale of petroleum. Now, the gas station, it includes the sale of petroleum along with the convenience store. We cannot discount the convenience store revenues. And I'm speaking to even the shareholders now. We project to have a significant revenue increase from our convenience store along with the sale of petroleum. Prior to the opening of these 2 service stations in January to come, we have been our revenues that we have seen is solely from LPG and automotive fuel. I wouldn't say fuels, but automotive fuel, which is gasoline 90 at our service station now, and recently automotive diesel. But we will have 2 full service stations. Full service stations, meaning what you know as a traditional service station. We'll have low sulfur diesel, we'll have automotive diesel, we have 87 and 90 octane. So from this, with the price competitive, I'm expecting to have, as you said previously, lines at our gas station.
Okay.
Along with our coffee shop, which again, it would not be like the traditional convenience store, but we are looking to have a similar thing to a well-known coffee shop worldwide. So we want to have our own franchise of that, you know.
Okay. Have you ever thought about including like an automatic car wash?
Well,
station?
it's funny you ask that. Our supplier currently sent us an email, I think it was the day before yesterday, with an automated car wash system. Unfortunately, though, I can tell you, based on the 2 upcoming service stations we have currently under construction now, we would not be able to facilitate that based on our space. Right. But we can look at it at our future ones, definitely, to come. Or if we acquire property close by, where we can incorporate it in our gas station well.
Okay. I have another question from Telegram. Are there any future plans to get associate or subsidiary stake in Master Lube Limited, or any possible business synergies between Regency and Master Lube?
Well, I can tell you, Master Lube Limited, I was formerly a director, which I had resigned primarily to focus on Regency Petroleum. Master Lube Limited is a lubricant company. It's a company that was formed to distribute a low-end lubricant, again, a price competitive lubricant, again, from a Trinidadian company. We were the sole suppliers to Jamaica for that particular product line. Now, with the pandemic coming in and everything, it basically slowed down the operations. So it is still in existence, very much so. But what we will be looking at would be more a complementary and alignment, as you said, with the lubricants line, because Master Lube is primarily a lubricants company. So
Okay.
I resigned from that, but yes, it's a possibility that there could be some alignment, or if that with Master Lube with probably other lubricant companies.
Yeah, right. I
Right?
remember I asked you Wednesday about the possibility of that as well.
Right.
I want to take the chance to take questions from anyone in the crowd. The mic is over here, or online as well. So if you have a question for Andrew that has not yet been answered, then you can come up right here. Okay, so we have somebody coming. Oh no, nope. Both of them go. Okay.
Okay, my question has to do with in terms of the cylinder side of the business. There's been a lot of developments that's been happening where you have more electrical stove units. How sustainable is that side of the business as it relates to the future?
All right, I'm glad I asked that question. What's your name? I can't just refer to you as
My name is Ian Glaze.
Ian Glaze. All right.
Yes.
All right. I have so many answers for you. I don't even know where to start, but let me start somewhere. What you're referring to is primarily, I noticed, in Kingston and the corporate area where you have a lot of apartment complexes. Now, these apartment complexes, I don't think it's a requirement to have your LPG cooking gas. You have to use an electric stove. Right. So what you're talking about is, I would say, it's a regional thing. So it's currently it's focused on the corporate area. It's densely populated, and you find that you have many apartments being erected constantly from over the years, and moving forward, it seems you'll have it. Now, I have the answer I have for you is that look out for LPG in these apartments by way of a metered system. We currently, I don't want to let out too many secrets either, but we are currently in negotiations with a current development now where we have put a proposal together for them with a metering system which would be metered to each apartment, similar to your electric bill or your water supply. So you'd have a centralized location with a commercial tank, similar to the big bakeries and restaurants. And now it will be piped to each apartment safely, and you don't have to worry. I mean, for LPG, you know, we're talking about on a first world basis now. LPG is so renowned internationally for houses, apartment complexes, even for electric companies. I'm quite familiar with some electric companies that do underground pipelines with LPG to drive their turbines, etc. Now, overseas, you have many homes that have not densely populated like apartment complexes, but they still have a pipeline underground to the home, which, I mean, based on the procedures and the requirements of installing those pipelines, it is quite safe. I must mention, because, I mean, you're thinking about cooking gas, but it's extremely safe. So to address our concerns about we're going to make an apartment complex have gas line running through the entire apartment, if it's that safe. But I can tell you, the distribution lines that are used, they are tested and proven. So I'm just addressing that concern if anybody has a concern. So, I mean, it is known internationally, and we want to move Jamaica on that first world basis. As I said, we are a local company, but we want to be multinational. We want to be big, or bigger than those multinational companies that we are familiar with, that are in Jamaica now, retaining earnings and basically carrying it back. We will retain our earnings and invest in our country, which we have been doing on a small scale now. So, but we at least start doing that. So we ensure. I mean, we started out just by the junior market is an indication of us retaining our earnings, because I can tell you, a petroleum company, is a profitable company, regardless of what. It's a profitable company, and to find you'll really find owners are sure. I'm not discriminating against any other company. I'm just telling you the fact. I mean, it's a profitable company. There's no great need for if you are especially a single owner to want to come to the market and sell part of your company. And it's already profitable, as you can see our books. And we want to expand. But my vision personally, as the CEO, I want to expand beyond our imaginations, our average imagination for our company. I want to see Regency worldwide. And this, as I said in previous interviews, we are in the fetus stage now. For all the shareholders who probably didn't acquire what they wanted to, what they applied for, don't be disgruntled, because the company is in a fetus stage now. So even when we start trading, we have a vast room for growth. So you can trade, you can because you will be disgruntled for sure if you see the stock double, for argument's sake, and I'm being very plain. If you see the stock double, and you say, boy, look at that $2 no man, I'm gonna get that one, I'm never get some, no trouble it. And then a month and you see it at $4 or $5. That time you go to be disgruntled because man, I saw it at $2 and I could have buy it. But I'm not moving away from the point too much, but but I have to express certain views,
I like talking about gains as well.
Right. So to answer your question, yes, the LPG, in my opinion, even more so than even automotive fuel, has a longer lifespan worldwide, globally. I mean, because we're more moving towards LPG. If you notice, our equipment or engineering is moving towards LPG more than moving away, as opposed to probably automotive fuel. Now, in saying so, we will move with the times. As I said, first world countries globally, internationally, using LPG in apartments, complex, in houses, whatever. So we have to move with that. It's not if but we have to probably start, because we used to the apartment complexes having I used to live in Kingston years ago, and it's an electric store. I know what it's like, and an electric bill. Yes, I mean, so right, we go to pioneer one now. We start in one now. We put a proposal together. It seems like it will come through and add to our revenues again.
This
is not a part of our projection in Kingston. Right, because I said we do bulk petroleum, and his question is concentrated, in my opinion, to the corporate era. You have apartment complexes, yes, across the island in Mandeville, Montego Bay, and I can tell you, Montego Bay, very, very similar to Kingston when it comes down to the apartment complexes. And Montego Bay is one of them. I have a close friend of mine who actually brought the idea to me at first, about 2 years ago. But he's going to build an apartment complex, and he's considering using LPG.
Is it that it's cheaper, right?
It's much cheaper.
So
Man.
it's much cheaper.
It's much more cheaper than he use electricity.
Oh, yeah, you're right, because I mean, I buy the big cylinder. That's at £100,
right.
and that lasts me like half a year. No, we don't cook that much, but still,
and he's referring to stoves. Now, when you're using electricity for heat, you're using a lot of electricity for heat. So if you're going to use electricity on a stove, it's a lot of electricity that you use, as opposed to, I tell you, I'm sure, I'm almost sure that an air conditioning unit, especially an inverter unit, will use a lot less electricity than a stove.
This might be a newbie question, but are there applications to use it for the AC units as well?
Yeah, man. We actually have AC units in Westmoreland now that uses LPG.
And we have cheaper per unit.
It's cheaper per unit. We have
Chinese
suppliers in Westmoreland who supplies air conditioning units that are solar and that are LPG.
And Regency do that?
No. It's a Chinese supplier. But
no. True Regency.
No. It's a separate. No. They will buy it. They can purchase the LPG from anybody.
Okay.
Because it's set up in a way you can use a 25 pound on it or a 30 pound on it.
Interesting.
No, we even have generators that use LPG. We have one at our office now. We recently installed a generator that is both gasoline and LPG. So as I said, we're moving towards LPG. So I don't think you should have any concerns with that. Are you an LPG supplier?
No.
Oh.
I'm not in the business. I'm just in the business of investments.
Okay.
But I asked a question based on when you look at a lot of retailers that sell appliances, a lot of the appliances that are being sold now seems to be electrical stoves.
Okay.
So it's on that basis, and given the just the level of development that I see going on, but know that you have brought a different dimension to it.
Right.
Certainly.
Because remember, you probably have, for argument's sake, if you have 100 apartment units in Kingston, we're just going to start out with one. So I give us some time. I'm sure it will take off. I have no doubt about it. We just I'm sure. I mean, what we are doing now, I'm sure when we pioneer this project and it's executed and it's successful, I'm sure others will come on board. I have no doubt about that.
I really like that conversation. When it start talk about saving money, my ears kind of perk up now. And I say, okay, this is definitely what we need to talk about, and particularly with how this, because we had the same question Wednesday, but it was on the automotive side for automotives that are moving towards be more electrical and LPG as well. So it's good to hear this from the other side, because I was thinking as well, how sustainable is cooking gas in general. If right now when you're seeing a sale on stoves, for example, 50% of them are electric and 50% of them are gas and electric, right? So it's actually very, very good to mention that. Do we have any more questions? I think a lot of the questions that we had on the prospectus itself, would have been covered on Wednesday. I don't want to re-ask those. Guys, you can check us out on YouTube, subscribe to YouTube. Remember, guys, Barita has a booth here. If you want to speak to one of the very knowledgeable advisors, then you can do so. And thanks again to Barita and Dequity for helping us to organize this evening. I tell you, Andrew, and I'm sure Damien told you as well, the environment within which this is done is very calming, and it's a unique experience, for sure. Andrew, you mentioned that conservatively, you would see yourself adding a new service station every year. Of course, you'll be aiming. So you don't want to go too high and then you miss the mark. So you set it low and then beat that mark.
Exactly.
Do you see yourself? And I guess this is linked to the question that we asked before. Do you see Regency going into another sub industry? Something close to what you already do, or another industry overall. Know that you're on the junior stock exchange and you have a lot easier access to cash, to capital.
All right, I can tell you, not in the near future, we would diversify. Reason being, as I said, for the petroleum industry, it is very capital intensive, and I cannot say that enough. Now, let me give you a basic idea in dollar value so you can have an understanding. To saturate the market with LPG now, because LPG really and truly carries a higher margin than the automotive fuel. If automotive fuel is a higher volumes of turnover, but the LPG will carry a higher margin, but it's much more capital intensive. Now, the reason why I said we wouldn't want to diversify at this point are in the near future, because we want to master one thing or one industry before we actually move to another. So for us to master the petroleum industry in Jamaica, we would have to spend a lot of money. That's the bottom line. We will have to spend millions of US dollars to purchase the equipment. I'm talking about the LPG now. One cooking gas cylinder you have at home costs about $7,500 for us to purchase that, right?
And I never pay a dime of that.
And
Just give me- just give me-
exactly. But the established companies, because they are established, well, we can do that now in our region. Can charge a user fee, which is a marginal percentage, like probably a 20%. You pay a user fee of about 1,500 up to 7,500.
When you say user fee, so like a subscription based type of
Right,
thing?
there's a user fee for the cylinder, for the cylinder.
So have you ever thought about a subscription base? So for example, I have a gas cylinder. I in the for the foreseeable future will be using gas once it's cheaper. Right, because that's what I'm familiar with.
Yeah.
Why can't I pay a certain amount of money every month, and then Regency as my service provider comes to my house and just changes that periodically?
No man, that's what we do. But what we do, what we do, not our head office really, but our dealers. Because how you get your cooking gas now, you'd have to call your dealer and say, boy, I'm out of gas. So he would come over, exchange that cylinder for you. I hope I understand the question.
So what I'm saying is that set up a system such that they know that, for example, the gas will be up in 3.5 months with X usage, or you have something on it that they can track it remotely, and they come directly to the house and change it.
That's a very good idea. You know, I never really thought of that. But that's a very good idea.
I'd pay money for that. So you just show up at my gate. Hey, Simon, your gas needs to change now.
We would have to implement that now with our dealers and distributors. Because they are the ones because the distribution network, our channel, would have been dealers or distributors. You have the filling stations, then you have the distributors and you have the dealers. The dealers are the one who come directly in contact with the final consumer. So you would
So I would be talking to you.
Right. I mean, if you have an issue, you would contact the head office.
Yeah.
And we would deal with it from there. But we don't anticipate that because we actually have constant dialogue and training with our dealers. You know, and we actually give them incentives to want to sell Regency product. I don't want to let out too much, but we give incentives for that. So because these dealers and distributors would sell all the different products, five or six different marketing company products, our cooking gas cylinders. Now we have to give them incentives for them to want to sell a Regency product, which we do. So in doing so now, I can impart what you just said to me a while ago. I said we're open-minded, so we take suggestions, which is a very good suggestion. So we can impart that and say, man, you need to probably put the system in place. You know, put a database, which you more than likely would have already, but just increase on that service with the database to know, boy, all right. Now you mentioned it, I remember I have a dealer that actually has a sticker that he places on the cylinder when you buy it and put the date on it.
Oh, so you have an idea.
So he has an idea now when it was applied. Right, that's a simple thing. Yeah. Right, so he would log that now in his database book and probably have a database now with the date. So it's about after 3-4 weeks, whatever. But you know, Christmas, it's kind of seasonal too, because when you have Easter, you have Christmas holidays, you'll cook more in Christmas.
Apart from the people in
KFC. Easter holidays, you find that you sell more. So I mean, you can adjust with the times. It's something we definitely need to look at.
Yeah, man. And I think my final point on that is, you know, what you mentioned before about using LPG as a cheaper source of energy to power your home,
right,
and to power, you know, more industrial complexes, which some do that service could spill over into that, because now you could offer the service to convert over. My home, I'm just using me for example. Say, hey Simon, you pay this, we come and convert over XYZ.
I can tell you straight off the bat that this is something we're going to look at very shortly. I'm glad I mentioned that. For your household, for the average household now, not an apartment. Well, I mean, an apartment too, but we deal with the apartment already. They will have their own pipelines, or distribution lines. But for the average household, like a home, what we currently have now, we have washing machines, we have clothes dryers that use LPG. That can be had, I mean, easily. You have your stove, your cooking stove, your stove, LPG, your oven with LPG, and also your AC unit with an LPG.
Help me, because I'm an investments guy, you know. When you say use LPG, meaning the LPG goes to a generator.
No, man, no.
It goes to the actual appliance itself.
To the actual appliance itself. I know 2 persons or 3 persons know that have they have LPG washing machine and LPG dryer over 8 years now. They have that.
So it's not a new technology.
It's not a new technology. What I'm saying to you.
I just never hear about it.
And you just connect as a matter of fact, they connect probably a 25 pound gas to that. Not even the 100 pound. No, what I'm saying, the point I'm making is that we can move to LPG equipment in the home. And we can, I don't know if you're familiar with those bulk tanks that smaller restaurants would use. It's like a white tank. It's about this tall.
I've seen it before.
And about this wide. And that can be easily installed in a home. The average household, you can easily install that. You'll pay a lot less than what you would buy the small 25 pound for per liter, because LPG is a gas, it's a liquefied petroleum gas. It is still sold per liter. So although you pay whatever price for your 25 pound, it is the cost is derived from a price per liter. Now, when you install one of those, the capital expenditure, I must say, it's not that significant either.
To make it so does it go in the ground? Like
no, man.
If we're talking residential now,
it's just like 100 pound, just take a little more space. That's all.
Oh.
It's just like a 100 pound user, and you would have a distribution pipeline from that now to your different units in your home. So you'd have a pipeline running to your stove, to your washing machine, to your dryer, to your AC, whatever else you can acquire. And you don't have to buy this one time. You say, right, for the next 3-4 months, I'm going to save towards, or whatever time, I'm going to save towards electric, a gas stove. Right? If you're already, you're going to save towards a dryer or a washing machine. Because I'm sure the clothes dryer, the water heater,
they burn a lot of
energy. Anything that requires heat is a lot of electricity.
Okay.
I have, I don't know them secret, but we have a clothes dryer at home. 7-8 o'clock in the night. If it's the one set of clothes, then wear, and then one wear tomorrow again. I wear it.
Dry it.
Wash and dry to go.
So you're not cover your face like that. Jeez, oh my God.
but I mean, I you don't have to worry. It's not going to be that costly.
Okay.
Because it's a cooking gas. The service you get from that. You pay. I don't know what you pay. We probably pay 3,000 for 25 pound here. I'm sure that dryer will last you way over probably 2-3 months. That 25 pound can last a dryer. And I'm sure if you use the dryer, you probably pay that in 2 weeks, 3 weeks, less than a month. I'm sure that $3,000 cost is going to be electricity for the dryer.
I'm going to investigate this fully, and I'll provide an update.
No man, you can look at everybody. Check on eBay or Amazon or something.
I mean, the way customs go on, I forgot to try to find something local, but we definitely gonna investigate it. But is there anything that you guys want to leave with us tonight? Any last words for your prospective shareholders? But I want to hear from Damon. Is there anything? Do we have any deals coming? I know him. I'm gonna say, boy, I can't say this.
I mean, we're always working. But obviously, we're here for something very important to us right now, which is Regency. And obviously, I mean, we're here for the IPO, but I mean, they're financial advisors going after the IPO and beyond, so.
And if you ever need any support with financial advisor, you know who to call.
Yes,
I just had to plug that.
I'll be sure to give you guys a consideration.
All right, Adrian, any final words for your perspective?
All right, I'm going to go back a bit to say, boy, I don't want to let out too much, but we had a lot of persons applying for the shares, and I'm very proud, first of all, of that, to know that, boy, as a Jamaican, as a proud Jamaican company, we have built a company that reached so many persons. And that reach so many persons and have so much interest in the company. And I'm telling you, what I noticed with this IPO, because I've been following up the stock market since some time now, an IPO come out and most persons just apply for shares because the IPO, they don't really look into the business. But I can tell you, this is what I noticed from the Thursday the IPO was published on the stock exchange site. I got a number of phone calls the day after and the night saying, boy, the prospectus look good, man. It's a fair offer, it's a genuine offer. No, I was so shocked and surprised because I
put
know
in the work. Why you shocked, man?
no. Because I said to you, I was so shocked and surprised to see that persons actually are reading the prospectus. That's what surprised me, because I know a lot of people just go towards an IPO because the IPO and they want to get in on an IPO based on the returns they can get. But we actually had a lot of persons who actually read through the prospectus and they were quite pleased with what they saw. Now, what I'm going to leave with my shareholders and with each and everyone here who is listening and who is here present is that Regency, as I said before, it's in a fetus stage. We're just about to be born, and we have a stage to go to. We're going to creep, we're going to walk, and we're going to run. Now, Regency is a Jamaican-owned company. We are a pro-Jamaican-owned company, and we are here for our company to excel and expand and succeed, be profitable, pay dividends, and all of this nice stuff to be profitable, the revenues to increase and to pay dividends is for our Jamaican people to benefit from. Apart from paying dividends and be profitable and revenues and everything increasing quarterly, yearly, annually, I mean, decades to come, we expect our Jamaican people to benefit from this. We will reinvest we don't have anywhere to invest apart from we're going to expand overseas, which we plan to do, but we will reinvest in our country, our people. And this is a fact. We have been doing it over the past 3 years. We have come to the IPO so we can spread our company amongst the Jamaican people. And we are very patriotic. We are a very patriotic company. We are proud of our country. We are proud of our athletes. We are proud of the fact that anywhere in the world you go, a Jamaican is there. And I'm focusing on, I mean, we're not only existing there, but we make a mark there. I repeat that. We're not only existing. You go all over the world and book up people from all different countries, everywhere all over the world, yes. But Jamaicans not only there all over the world, but we actually stand out. And Regency is no different. We will stand out first of all in our country. Everybody in Jamaica will know of Regency.
And overseas.
Everybody overseas will hear about Regency, and then know they will experience Regency. Caribbean first, and then elsewhere otherwise. All right. So to the shareholders, don't be disgruntled if you never acquire what you wanted to acquire, but stick with us and you will see. I don't want to say too much. I don't like to speak too much. I mean, I don't want to talk too much about our progress, but the fact is the fact that you will see what we have done. And you see where we are going. You see we have the 2 service stations and we have plans for more. So you can do the maths on that. As a shareholder, you will see and you will know what to expect. So we have exciting times ahead. We have progressive times ahead. We have a long way to go and we'll reach there quickly in proportion to where we are now in relation to what we have planned. We will reach there in a timely and quick enough manner, and we will expand overseas for sure, and we will be world renowned. Mark my words on that. We'll be world renowned. Again, we are a Jamaican company and we take pride in our Jamaican people, and we want our country to grow and to reach that first world status. And I'm sure we can reach it because we are not limited because of our size. Right? We have the heart, we have bred Jamaicans. And I have all confidence in the company and our confidence in our people. Right? So we will do our best and play our part in our economic growth and development.
Okay.
And and you can look forward to see us doing that.
All right, and we will close on that. Thanks again.
Just a second, Simon.
Yo, yeah.
Right here.
Oh, you have a
Okay,
question?
okay.
Yeah. So Andrew, you would have said that the company is in the fetus stage, right? So I suspect that there are a lot of plans that, you know, even we, the shareholders or the prospective shareholders, don't know yet. Can we hear now, or can you say now to us, the prospective, that we can depend on you, or depend to hear more from you whenever there are, you know, developments that you think that we would be very appreciative of? And this is, you know, outside of the standard GSE rules of, you know, every quarter you release
Normal.
your financials. Can we depend on you, just like how you're here now with the Stocks on the Rocks team? Can we depend, you know, to hear from you and, you know, what the business is doing and some of the plans? So as you grow, you know, we are well aware.
All right, I can tell you,
are.
I'm not only going to answer and tell you will definitely hear from me, but today I got a contract by email for me to sign to give. I think it was like not quarterly, but probably like every 3-4 weeks. I'm supposed to appear on a particular program to give updates. I think this program now is a recent development, so I'm supposed to appear, which I didn't sign the contract as yet because it came to me when I was about to leave my office. But yes, definitely we want to keep you engaged. We want to keep your shareholders excited, and we want to have we want to keep you informed. So we'll definitely let you know when any developments will take place, any acquisitions, any alignments. We'll definitely keep it. If we have something new coming out, or whatever it is, we will definitely keep our shareholders and the general public informed of our operations. We are very transparent in what we do, and we want to progress steadily, and we will not keep that too much of a secret. When we have exciting news, we'll definitely make it known and inform the public and our shareholders, and we'll keep abreast. I mean, you will hear from us constantly of what is taking place within the company. Our general operations will be known, you know. So yes, I plan to be in contact with you, which is how which is how I can tell you I personally have operated since day one. I'm underground, you know. I'm constantly underground. If you come to our office, you will see me. The average person walk by, we'll be able to lend a concern, which is why I say we are open-minded. We listen to each and every person, whatever they have to say, as long as something seems constructive. Any comments, we will listen to it, and we make note of it, you know.
All right.
So, yeah, man, that's it. Sorry.
Okay. Sorry about that, Andrew. So thanks, Andrew. And thanks for that point, Trevor. And I think market sentiment. It's important for companies to constantly engage their shareholder base, and ensure that as shareholders, the shareholders are up to date with the happenings of said companies. So I want to thank Andrew and Damian from GK again. Thanks everybody for thank everybody for coming. We still have some more liquor and juice over there. I think the sandwich is finished, hush. Thanks everybody on YouTube and Twitter. Big up Visual Tech, and Mark and his team. They supported with all of the video and most of the video and audio equipment here. And big up to Jason as well for his support, and Rash and Trevor and the entire team. Remember to follow us on YouTube, and remember to join our Telegram group as well, as we continue to grow this community and create spaces like this for you to have conversations like this with CEOs like Andrew and Dane from Barita before. Thank you so much, everyone.
Every time it ring, I was wishing that you thought you'd be the same old thing again. Girl, you're not alone.